Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go over a bunch of market conditions, show you what's going on, trying to orient ourselves on where we are in this commodity bull market, looking at market conditions. So we're going to dive in here with the dollar first. I'll do some comparisons, some fractal analysis. Then we'll dive into maybe yields, look at the yields and show us that we're very early in this, I think, and we'll look at the housing market and some other information with ratios. So let's dive in here right now. I'll give you my financial opinion. This is the DXY, and what I wanted to show you is we had this big consolidation period from 1985 all the way to 2002. It was kind of this U-shaped pattern. Then we went down in a very large sell-off in the relative strength of the dollar. And if you were to take a similar pattern and just kind of look from peak to peak here and back out and take this and move it, this pattern and move it over here, what you're going to see, we kind of bunch it all the way up, is that it's the same pattern. It's the same type of movement that you get before the crash of the dollar, kind of that last U-shaped, bull-shaped configuration. So I think, by looking at how this thing has moved throughout time and comparing this pattern, this bull-shaped pattern here to this one, we could head lower here. And I know that we're just looking at the fractals and we're looking at it to see if they're the same, but I think the market conditions are also in agreement with this coming back down. So fractals there, the movements of how the herd mentality moves, together with each other. It's putting in all the same patterns. And if we get this DXY to fall, and we're kind of, we've got the wick at the top, we've got the small little down day. We'll see which way we go here, but just historically, we could see a weaker dollar, which will be a tailwind behind the stuff that we are invested in. That's something to watch. Obviously, from a perspective of the 10-year, the 10-year yield is rocketing higher. This is unquestionable momentum coming to the upside here. We're also seeing that in the 30-year yield, where we have a lot of momentum behind it. Now, a lot of people are looking for this to turn around. They're saying, well, maybe I should look at bonds. They're paying higher interest rates. And one thing I was looking at I was reading on Twitter with Cuppy, and I agree with it, is, well, what makes you think this is going to turn around? If we look at oil prices and we look at this tightness in the oil market, and you look at energy costs in Europe have been going up, and so is their consumer price index. And I know in the short term, natural gas has pulled back a little bit, and their storage is preventing them from taking on any more gas, and it becomes a flow problem at that point. If you want to drive across the entire nation and you have a full tank of gas, it doesn't mean you can make it. You can have a full storage tank, but if your flow rates are basically nothing or much less than what they used to be, then you guys start looking at the flow rate. But if oil prices were to take off and natural gas prices were to head higher in the United States, we're going to see higher inflation rates. If we see higher inflation rates, this isn't going to turn around. It's probably going to continue higher. So I don't want, just something to think about and to chew on. Let me go back down to the ratios here. Now the ratios, we'll start with the CRB to S&P 500. We are still looking fantastic from a long-term perspective. Again, stocks outperformed during this period that we went down. And then we have a new paradigm where commodities will outperform as we break that trend. And we are still in this trend. Now, that doesn't mean that we just go straight higher. We could pull back. We could move sideways for a while. And that's probably going to be the case. I think the S&P 500 is going to move on higher, and commodities will probably, it may even underperform the S&P 500 for a little while. We're getting a lot of selling type pressure over here where we could pull back from the ratio perspective, but from a longer term perspective, it still looks really good. And if oil were to kick it up a notch, whenever that kicks in, it could be a month from now, 2 months from now, I think we're going to see a lot of strength there when that turns around and heads higher. We've got platinum to gold ratio. This thing's looking fantastic. Platinum is definitely the one that I like the most given a ratio perspective. We've broken out, we've come on back, and we're starting to move again. We've seen great strength here this past week, and it's looking pretty good for platinum to outperform gold. Platinum against palladium, it's also outperforming this past week. Done very well. Big long-term view on this. We've got nice big green candles coming in, small sell-offs. I think platinum will outperform palladium. And then we've got platinum divided by silver, another one that's broken out of a large pattern to the upside. And I think these guys can run together. Doesn't mean that one has to go up and the other one goes down, but platinum's looking real strong against everything. Gold versus silver. What I see on this guy here is a breakout downward of this trend line, which means silver is going to outperform gold. We've got a retest of that breakout, which we've basically done. And now we just have to break down even further out of this trend line. So I do think, given the market conditions, that silver could outperform gold here repeatedly. Palladium versus silver. I am in the camp that silver will outperform palladium. I think palladium will probably be the laggard of all of them. It seems to do very well during, let's say, palladium versus silver. Palladium does very well from 97 to 2001, which is kind of like the tech boom. And it also did very well from 2012 to 2020, March, which is another tech boom. And then that's where I was rotating my metals of palladium into something else. Silver, I was trying to get silver, but the premium went ballistic, so I chose platinum over silver. But I do think that this will compress, and we'll see silver over time outperform palladium. Dow Jones Industrial Average versus gold. Short term, we'll see where this thing goes. I'm kind of indifferent in the short term on it. But big long term, I think that we get a pullback, a smaller bounce. Think of this as kind of like a flag pattern, and then I think we're going to head lower. And I kind of just threw that in there randomly there. But I think that we're going to compress. Gold will outperform the Dow Jones Industrial Average given the market conditions, given where I think energy prices are going to go and the margin squeeze in a lot of the companies. Gold versus oil. What we have here is a very large compression of the ratio. Oh, that was weird. Very large compression of the ratio downward, meaning oil's outperforming gold. We have a retest of this breakdown support line, and then we've broken down to the downside of that. And I do think that we'll work our way lower over time where oil outperforms gold, given the market conditions and the inventories of oil. So I do think they could both go up in tandem. I just think oil will outpace it, and this ratio will compress. And it will compress down to a level that I think will be around below 10. So it will go below this, maybe even to an area of 5 or 6 or 7 or something like that. The copper to gold ratio, let's back out and take a bigger picture view of this thing. We've been moving sideways in the short term, but this is a big picture view. We have a very strong resistance line that we have not broken. I said, are we going to break this thing, move back up like it did in 04? It's possible, but right now we have not broken it. We've come back down, and we're getting a little bit more momentum here past couple weeks where copper has been outperforming gold, and that could continue. We've got nice, good, we'll call it ratio expansion for copper. And then looking at uranium, is this a kind of a double topish where silver could outperform uranium and we come back down? It's possible. But big picture view, uranium's looking really good for potential outperformance of silver. And I like silver. So uranium's looking really good from this perspective, from a long-term perspective. Uranium versus the S&P 500 looks really good for an outperformance. On a long-term perspective, uranium versus gold looks really good for uranium outperformance. Uranium against crude, we're breaking out of this downtrend line. Uranium could outperform. Basically, uranium can outperform. Looks about just about everything. Uranium versus copper. So I think uranium looks really good. Futures pricing at least to outperform absolutely everything else. Coming back down and looking at some of these other metrics that we don't normally cover a lot. Here's the global price index of all commodities. This is April. Hold on, let's go on to this one. So this is the consumer price index. Yep, it's got recent data. This guy has been rocketing higher. We had a massive move from September 20 all the way up till June 2022, and this thing has slowed down. We're moving sideways, but keep in mind, in June, we released from the Strategic Petroleum Reserves and really slowed the movement of oil down. We also had Freeport go offline for natural gas, and I think that's why it's moving sideways. So we have pressures in the consumer price index from housing and rent and food, but the energy sector is really slowed down. And I think that will put pressure on us coming up in the next few months. You know, we'll have a down, maybe energy will be kind of low for a little bit, and then we'll start to accelerate again. And I think that the consumer price index will head on higher again. Looking at housing starts. Housing starts are still in an uptrend. They have not broken the uptrend line yet. It's not the housing price that matters. It's the volume of housing starts for loans in the system. So we're looking at the volume, and that's the volume here is 1.44 million. We're still in an uptrend, so we'll see what happens over the next couple of data points. If we break lower, or if this remains sideways, or if we go higher. And remember, lower home prices may actually be beneficial for the volume of homes being sold. Maybe, maybe not. We'll see. So that's something to watch there. The producer price index, again, this thing's in a massive down pattern, kind of an expanding wedge. We've gone on up. We've pulled back a little bit, but remember oil's been getting released from the Strategic Petroleum Reserve. Freeport's down, and I think that has a huge impact on producer price index. When that comes back up, we should see this break to the upside. At least that's my opinion on it. This is our active listing count. This is inventory of housing. This goes back to 2017. And we are still at a very low level for inventory. And all the bubble people, they're saying, well, we're going to have this huge crash. I just don't know if that can happen with inventories only at 730,000 homes. Even this back here is at low inventory. A high inventory count, it would be off this chart. I mean, we'd have to go, I think, somewhere in the range of, it's about 400,000, 450,000 per month. So we need to go somewhere on the lines of like up here to get up there for me to be really concerned about housing. So what we see in housing is we're basically in the middle of an expansion phase of real estate with strong demand that has basically hit affordability problems with interest rates. And we're basically, everything is slowing down. In order for them to keep this slowed down, they're going to have to keep interest rates high. Can they afford to do that? I don't know. That's a good question. And then the M2 money supply versus GDP. This is basically inflation. You can see that we were in a very strong kind of outperformance of GDP in relationship to the M2 money supply. But in 2009, that broke. And we've been creating M2 money supply at a faster rate than GDP, which is inflationary. So this has been in the system, it's been accumulating, and now it's time to see it in the consumer price index. So that's what I've got for today, guys. Hopefully you enjoyed the clip. If you guys are interested in how to play all this, definitely subscribe to the Platinum membership, findinghighforvalue.com. Join on up. We have a question and answer session at 5 p.m. Saturday or Sunday, 5 p.m. Mountain Standard Time. You can ask questions to me directly through Zoom. And if you guys like the content, give me a thumbs up, subscribe to the channel, and we'll catch you next time. This is Finding Value.